What do we attribute today's losses to?
Absolutely. Today has been a sideways day on the market. Basically, we are attributing it to slight profit taking. If you analyze further, you would find that the market was actually up earlier on in the day. However, closer to the end of trading, we saw some supply hit the market, and the market actually lost ground. You have the likes of banking who actually traded sideways as well, the banking sector, and the food and beverage sector as well. The oil and gas sector actually appreciated, bucking the trend compared to the other sectors that we've seen in the market.
Okay, let's talk to us about what you expect for equities this year. I mean, the year started off to a rip-roaring start, and the NSE gained over 5%. Great improvements from what we've seen in the last year, just by way of subdued share prices. There's an expectation that things will improve. In your view, valuations and pricing for general Nigerian stocks, are we likely to see major improvements this year?
We absolutely believe in the valuations of Nigerian equities, even though the start of the year seems a bit like a deja vu. If you remember last year, early last year, the market actually hit a high at 28,000 as well. And similar period this year as well, hitting to about 27,700. We, however, believe that part of it is due to profit taking. Some of it can be attributed to wider issues across Africa, though we don't see that as a major driver in the market at the moment. Right. We, however, believe in the pricing in Nigeria. Nigeria still remains one of the cheapest markets, right, trading at around 10 times earnings, compared to other markets like right, Kenya and Ghana, trading at 15 to 18 right, times earnings. So if you have an Africa fund or an index fund, you find a lot of investors coming to invest in Nigeria.
Let's talk about bonds and how they've responded to a rate increase by the MPC in the last week. There is a general fear that for medium and probably long-term papers, the yields will start to rise. Your view?
I actually don't agree about that view. The MPC decision was that you should, the liquidity ratio rose from 25% to 30%. If you look at the books of the banks closely, you will find out that majority of the banks actually have liquidity ratios at over 30% anyway. So a lot of analysts thought that you would see a lot of banks buying short-term bonds or paper to cushion that liquidity gap. However, we don't think that will materialize. In addition, the calendar for the first quarter by the DMO on issuance of federal government bonds actually came out about a week and a half ago. And what we saw is there actually won't be any issuance of 20-year bonds in the first quarter. We believe that as that supply dries up, you should see demand actually rise and prices rise as well. Right. And in that regard, we think yields should fall.
Okay, let's talk about commodities and the fact that Nigeria is the largest exporter of crude oil on the African continent, the 8th largest the world over, should be buoyed by a rising oil price, but of course a major petroleum products importer, and hence those inflationary concerns. What's the relationship between rising commodity prices and things like petroleum industry stocks, petroleum marketers?
As you know, there are different types of commodities, but generally we have seen commodities as a group or as a sector rise across soft commodities and also hard commodities. So you have oil trading at over $100 a barrel on the back of concerns in Egypt, as well as the Suez Canal, thinking that maybe, when you find about 2 million barrels per day passing through the Suez Canal, and if there are disruptions in that area, then you will find out that it may hurt supply. And you have some governments who are actually stocking up. So you have oil inventory and heating oil rising to heating oil inventory rising to an all-time high in the US. So obviously all of that is driving demand for crude oil upwards. Talking about agriculture, talking about soft commodities, wheat and sugar, we see them at all-time highs as well. Wheat is trading at a 30-year high at about over $8 a bushel. You have corn also trading at 20-year highs,
right,
and sugar trading at 22-year highs. So we obviously that would impact the earnings of some of the producers or some of the
right,
companies who have inputs locally.
And just very briefly, those soft commodities, the bearing on Nigeria's inflation outlook, where about 50% of the inflation basket is food.
I think that you're right. I believe you're right. About 45% is actually agriculture in terms of the inflation basket. However, a lot of it is local produce and not imported produce. The impact of higher commodity prices or soft commodity prices affects companies that actually import wheat and sugar and the likes. However, the ability to pass on prices to retailers and some of their suppliers would actually impact the inflation numbers that we see. And since we know that the CBN is trying to keep inflation at sub 10 or single digit numbers, obviously the CBN might continue to maintain a monetary tightening stance.